Here's a look at the stocks right now. We're down 357 points just 3 minutes into the trading day. Let's see what our financial expert Terry Savage has to say. Terry?
I wish I could tell you what happened. I know that's what you want to know. I thought about it, and all I can describe it as the stock market took a giant bungee jump leap off a cliff yesterday. And you know, with a bungee jump, what happens, if you remember the days of those videos, they bounce back. And now we're bouncing down again this morning, down about 350, as you said. A lot of things going on in the market, a lot of nervousness, and that's all you can say. First of all, there are a lot of people and institutions that don't want to give up the profits they made last year when the S&P was up 28%. The big nervousness, of course, is the Fed. They're in the midst of a meeting now. They'll come out tomorrow. Not much excitement expected. They're either going to maybe do a quick raise of interest rates this week, or maybe they will, as expected, postpone it till March, but everybody knows that's the track they're going on. And then, of course, there's Ukraine. That just adds to the general nervousness.
Yeah, but the idea of inflation and maybe rates going up, I mean, this is not a surprise to investors. So what's the issue?
What triggered that yesterday? It just was a mad rush for the exits. And it was, I think, a day of panic selling. Again, just to preserve profits and not be the last one out the door. Yeah. And by the way, I hope I'll never see 1,000-point swing and then 1,100 points down and then up 100 points. But you're going to see lots of big swings because there is all this inherent nervousness between those who want to buy bargains, and some did get bargains yesterday. Whoever bought at the bottom, relatively speaking, got a bargain, and those who just are a little bit scared. A lot of people have now losses in many of the big tech stocks. So they're going to have to, there's a lot of nervousness, is all I can say. And for all of you who are in your 401k, ignore this, please.
Yeah, well, I was going to say, for those of us who don't know what to follow, we always hear buy low, sell high. So yeah. Should we be buying stuff now, or what do you do? Just leave it alone?
I think that the best, for most ordinary people, unless you want to sit there all day long and instead of watching us watch cable and Kramer and so forth, the best philosophy is if you've got at least 20 years of time horizon to use that money, and that might even be during the period of retirement you need stocks, then you just got to have the discipline to continue contributing, especially if you're contributing, and to ride it out. And if, by the way, you're already in retirement, and you were so thrilled when you got your year-end statements in the mail last month, a couple of weeks ago, you have to say to yourself, okay, how much exposure do I want, because could this happen again? But for most people, go on with your everyday life. This is the stock market at work.
All right, Terry Savage, thanks so much. If you have a question for Terry, you can go to terrysavage.com. Thanks a bunch.
Thank you.
8:36 news from around the world.